operating legal framework, compliance with accounting standards, and corporate governance is very key to ensure that. And market infrastructure too, to encourage local participation, like PFAs. We talked about looking at their investment in equity, their PFA rule to be amended appropriately, the asset management firm to develop various new products that's going to create the depth that is required in the market, compliance with international standard, IOSCO, and support product innovation in terms of derivatives, swap, EFT, and infrastructural fund that will really aid the development. And again, with deep financial literacy, which is very germane. So to cap it up, we look at the strategies for wealth creation. This was part of, let's go next slide. Creating wealth, we talk about generating income, managing expense, managing increasing asset, managing the liabilities side. If you must grow, borrow to buy asset. So it's very key. We talked about managing risk to ensure the insurable risk, diversity, to diversify the uninsured risk. Quickly, we look at the role of government in this, but most importantly, is about education. To educate the skill and the talent development. We look at job creation. You know, when we know that the main role of government is to create an enabling environment. And in creating an environment, these are the buckets of what we are looking at. Financial market deepening and development, enabling environment for creation of wealth, which is very key, because in terms of education and in terms of some deliberate policies and activities of government that is targeted towards aiding the growth of the Nigerian capital market. We look at the non-interest capital markets and the impact on the economic development. You agree with me that there is a strong advocacy around this in the recent times. In the last 3, 4, 5 years, a lot is happening in this space and is quietly integrating and contributing to the growth in the market, to the extent that even at the federal government level, the sukuk that was raised was oversubscribed. So it's very key. Look at the non-interest market product, the sukuk bond, Sharia equity, non-interest mutual fund, non-interest REITs, indexes, and hybrid that could be. And the justification for this, is it relevant? Yes, it is relevant, because we have large Muslim population. And because of their belief, there are a lot of funds that are outside the conventional bank. Thank God we now have Islamic Bank in Nigeria now that play this role. So again, the non-interest capital product could unlock the idle fund that you have, huge idle fund that you have in here, and you get it to the capital market for investors to play and for the market to grow. We look at project financing. The nature of non-interest finance can accelerate infrastructural development, as you see in the case of the federal government and the step they have taken in this direction, and some that has happened. I know we have some mutual fund that are sukuk based now, and there are a lot of development with the support of the SEC that is coming with a lot of development in this area, so that the product development will grow. Job creation and poverty alleviation, increase funding for businesses and create more jobs. The non-interest finance can support economic development in these areas. One, to harness out of the bank fund due to avoidance of interest, bridges the access to finance gap, social benefit focus and equitable contract, and lastly, to attract both local and foreign investors. You agree that the huge foreign investors in the area of Islamic banking that will even want to come to Nigeria cannot be underestimated. So the need to create an enabling environment for them to come in terms of policy, in terms of reforms, in terms of the environmental factors that must be in place is very key. And on this note, I want to thank you for listening.
Thank you very much, Mr. Ashade, for the enlightening and robust presentation, and I welcome you all to panel 1. Mr. Ashade has spoken extensively on the challenges and opportunities presented by the Nigerian capital markets, alignment or misalignment, as it were, with the Nigerian economy vis-a-vis representation of key economic sectors. He also has highlighted strategies for driving capital market listings, which is where I would like to begin our discussions this morning. It was interesting to note that the NSE's market cap could increase by 200 million. Did you say 200 million or 200 billion? Naira, or that's dollars? $200 billion. Okay. That's right. Okay. If Nigeria's market cap to GDP ratio converges to a peer average of 55%. Okay. You know, Oscar, let me first come to you. Could you tell us some of the things that the NSE is doing to attract quality listings from underrepresented economic sectors, such as utilities, telecoms, agriculture, and what more needs to be done to encourage these companies to come to market? I know you're going to tell us some exciting stories of some coming to imminent companies coming to market, but let's hear the whole story from yourself.
Okay, thank you very much. Good afternoon, distinguished ladies and gentlemen. I must start by thanking both the Senate and the House committees for inviting me to participate in the discussion today. I just want to clarify, the numbers you're putting out, those are equity numbers, right? It doesn't include bonds, correct? Right. Okay, so the equity space, it is true that there is a big opportunity to grow the total market cap and improve the ratio, the market cap to GDP ratio. In fact, we're a little bit more aggressive when we started in 2011. I think we put out a $1 trillion number. The truth of the matter is that if you look at the Nigerian economy and you look at GDP numbers, the capital market and specifically the equity markets can do a lot more to be representative, but the conditions need to be right. The exchange cannot do it all, but the exchange has done a lot of things. And I probably can spend 2 hours talking about what the exchange has done to improve that ratio. The first thing is to take a very macro perspective, engage with policymakers, engage with lawmakers, and engage with other key stakeholders like our regulators to see if we can all work together to create an environment that supports companies coming to the market to list and that supports investors participating in the market. So that's the first thing that we've done. The second thing is to look at the market structure itself.
We're still on our live coverage of the second Capital Market Stakeholders Forum, organized by the House of Representatives and the Senate Joint Committee on Capital Market and Institutions, Securities and Exchange Commission, and other stakeholders, with the theme Capital Market as a Catalyst for Economic Growth and Development. Well, we've been here covering this event for some time now, and this is where we will be rounding up our coverage of this episode today. My name is Lanre Lasese, and would now like to hand you back to our studios for regular programming.
You've been watching a live Channels television event.
You've been watching the conclusion of the second Capital Market Stakeholders Forum, which held in Abuja, the Federal Capital Territory. We do sincerely thank you for watching, as we ask that you join us again as we continue with our